Thank you so much, Chair Perlmutter. And, I think one of the things that's important to acknowledge is that this is one of our first congressional hearings on public banking in modern American history. And today is a historic day. I think it's a day worth celebrating. And I thank the chair for his courage and his political courage and willing to convene this in front of the Financial Services Committee. Now, I learned a while ago, when I first got to Congress, I thought, man, people definitely study what they're talking about here. Then I got here and I realized that a lot of my colleagues don't even read the bills that they are commenting on. But for anyone who is curious, it's right here at the desk. We're making lots of statements that have nothing to do with the legislation. And frankly, if I made comments that very publicly demonstrated that I didn't read the legislation I was discussing, I'd be embarrassed, but that is an aside. Here on planet Earth, though, this bill is about providing a public option for financial services, an option, not a government takeover, right, Mr. Pawar? This is not about a government takeover of all banking services in the United States. But I do think we should talk about how things work now, right? Let's talk about some of the extractive practices of private for-profit banking in this country and why we desperately need a public option. So, Ms. Del Rio, when a commercial bank decides whether to make a loan and what interest rate to charge, it considers not only the riskiness of the loan itself, but it also incorporates the bank's target profit margins based on their quarterly goals and shareholder dividends, correct?
Yes, I would say that the banks are driven by profit maximizing motives, yes.
So it's not this mythology of we have this interest rate based on how risky the loan is, but it's also we have this interest rate based on how much of a profit margin on Wall Street we want to make. Now, isn't it the case that a public bank is likely to be a cheaper option than Wall Street for businesses and governments who seek affordable credit? Because a public bank is not-for-profit, so it doesn't need to pad its interest rates in order to make a profit. Isn't that right?
Right. A public bank would be chartered to serve the public good, and it would remove the profit-seeking shareholders from the equation and allow for other benefits other than maximizing profits.
And a public bank ostensibly wouldn't have, billionaire CEOs that are paid hundreds or thousands times the amount that their lowest employees are made. Is that correct?
Yes, that's certainly our vision for public banking.
Now, in the same vein, public banks are able to extend credit and banking services to communities that Wall Street has deemed unprofitable, correct?
Yes.
Now, I represent parts of the Bronx where more than half of residents are either unbanked or underbanked. We heard some stories today that I thought were very, optimistic and rosy, like Wall Street executives. They will want to compete for business. Of course, they'll extend services in low-income communities. But we're talking about Earth, right? And on planet Earth, there are a lot of communities that are not profitable to bank. Now, how would the Federal Public Banking Act complement state and city level efforts across the country?
Yes, thank you for that question. We talk about the Federal Public Banking Act as a game changer for local efforts like ours in New York, where we are working with broad-based coalitions and more than 65 state legislators to create a state framework for local public banks across New York City. So right now, public banks or cities that would seek to charter public banks would have to go through commercial bank charters. What our legislation locally would do was create an appropriate and safe and sound framework with capitalization requirements and many other provisions to ensure sound governance and safety and sound.
Thank you. I apologize for cutting you off. I just have 30 seconds left. I'm so sorry. Now, one big thing that people don't know, most public entities at state and municipal levels, they actually are forced to rely, your state, your city bank, the bank that your state and city works with are commercial banks too, right? So a lot of people don't know that your city actually has to keep the city's money with like a Chase or a Bank of America or a Santander, etc., because there's no public bank. And as a result, those private banks can actually refuse to finance projects that are against their financial interest, right? Like they can refuse to finance things like worker cooperatives or renewable energy projects if it cuts against their own profit margin. Isn't that correct?
That is absolutely correct. And that's why we need the Federal Public Banking Act that would provide technical assistance and grants and really be a complement to local and state frameworks like ours in New York.
Thank you.